Today, I want to talk about how you know when your accountant is not the right fit for your business anymore. This is a question I hear from business owners regularly, and the honest answer is that most of them already know something is not right. They just do not know what right looks like. The most common sign is simply that you only hear from your accountant once a year around tax time. They prepare the return, you sign it, you pay the bill, and you do not hear from them again until the following year. For a very small or very simple business, that might be fine. But if your business is growing, has staff, has a company or trust structure, and is making decisions throughout the year that have tax implications, once a year contact is not enough. You are making decisions in an information vacuum and finding out the consequences 12 months later. A strategic accountant contacts you before things happen, not after. Before the end of the financial year, they should be talking to you about prepaying deductible expenses, maximizing superannuation contributions, reviewing your POI-G withholding installment, and identifying whether you have any tax planning opportunities that need to be acted on before June 30th. If your accountant is not doing that, ask yourself when they last called you unprompted. If you cannot remember, that tells you something. The other clear sign is that your accountant has never mentioned your business structure in the context of tax planning. If you have been operating as a sole trader with growing revenue and your accountant has never raised the question of whether a company structure would reduce your tax, that is a gap in the service. Structure decisions can save material amounts of tax and they get more valuable as income grows. If those conversations are not happening, you are likely paying more tax than you need to. There is also the Division 7A question. If you have a company and you have ever taken money out of it informally, whether as drawings, personal expense payments, or intercompany transfers, and your accountant has never mentioned Division 7A to you, that is a warning sign. Division 7A loans that are not documented correctly become deemed unfranked dividends, which create large unexpected tax liabilities. An accountant who is reviewing your accounts regularly should be catching this before it becomes a problem. The difference between a compliance-only accountant and a strategic accountant is not always about qualifications. It is about the service model. A compliance-only accountant prepares the required lodgements and keeps you legal. A strategic accountant does all of that and also proactively advises on structure, tax planning, Division 7A, asset protection, and growth planning throughout the year. You should not have to know to ask about these things. Your accountant should be raising them. Changing accountants is simpler than most people expect. You engage a new accountant, they write to your previous accountant requesting handover of your files, the previous accountant must provide your records, and your new accountant updates your ATO authorization and takes over. The whole process takes 2 to 4 weeks and can happen at any time of year. You do not need to wait until the end of the financial year. The bookkeeper and accountant working together is something I want to flag specifically. At TrueTally, we actively coordinate with our clients' accountants throughout the year. We produce clean monthly accounts, we flag coding questions before they become year-end problems, and we implement whatever accounting decisions the accountant has made. If your accountant and bookkeeper have never spoken to each other, that is worth investigating. Both advisors operating in isolation cost the business money in double handling and missed planning. If you are wondering whether your current advisory team is working as well as it could, book a free call with TrueTally at truetally.com.au or call 0468159950. We service businesses across Victoria and can help you understand what clean, integrated bookkeeping looks like as the foundation of a stronger advisory relationship.